let's start with the BOJ, because they're really not expected to do anything, maybe a tweak. Basically, what's then priced into equities, and what could be something that would have enough of a surprise that it could move the market, even for a day?
So I think if you look at most of the surveys, that most economists assume that the Bank of Japan is actually going to maintain the status quo, i.e. really not do much after today's meeting. Frankly, because I think there are, although they say that there are a lot of options, we think, in our view, that the options are actually relatively limited, number one. And number two, it's ahead of the Fed's decision, so really don't want to make a bold move ahead of the Fed. And third, if they were to move dramatically, for example, to cut rates right now, of course, there are some negative repercussions that could be impacting Japan's banking sector. So I think for all those reasons, we think most likely they're going to stay put. And we believe the markets are actually already discounted that scenario. To your question, though, what could they do? One minor tweak, for example, that they could contemplate is to consider extending the timeline for the forward guidance. Right now, they're setting themselves for keeping ultra-low monetary or interest rates until the spring of 2020. We frankly think it's going to be longer than that, but something official along those lines of extending that guidance could be an option. But we don't think that's going to be likely.
Seems like one of the reasons people are looking for that, even a small move like that, is because the Fed's expected to make a rate cut. ECB just signaled we're going to come very soon with more stimulus. So this would be the Bank of Japan's way of keeping even ever so slightly in that dovish tilt camp.
Sure. Of course, that is, they are well aware of that context globally. But at the same time, again, when you are faced with pretty limited options to begin with, do you want to pull those cards now, or would you prefer to wait and keep those cards for the future?
What about the Federal Reserve? Could they have something? I mean, what if they cut their key rate and come out with a very dovish statement, signaling more rates coming? What if they come out with a less dovish, maybe even a slightly hawkish statement? Could something like that hit the Japanese stock market?
Yeah, so I think right now, similar to what I just explained about the BOJ, I think the consensus in markets is that the Fed will cut. And if the statements surrounding that decision are even more dovish, i.e. a lot more cuts than are currently priced in by the markets, of course, some people could take that positively. On the other hand, if they come out with a more hawkish tone to their statements post their decision on Wednesday, that could actually spook markets. What do you mean? Because there are multiple cuts, as we know, priced in before the end of the year, not just this week.
You know, one of the reasons the BOJ is not expected to do anything hardly at all is because, in their view, economy's hanging in there.
Yeah.
Inflation's far from target, but maybe you've got some transitory factors like low oil prices.
Right.
You actually are expecting the third consecutive quarter of year-over-year declines in earnings, but you have coming up a more positive view. What are you looking for and why?
Correct. So I think part of that characterization that the BOJ has conveyed to markets about their view of the economy is similar to our own, in that the economy has actually been growing since QE began this time around. Nominal GDP is about 11-12% larger than it started in 2012. Deflation has turned into mild inflation. Corporate profits have more than doubled. The stock markets have more than doubled since then. So you can't really look back at the last 6 years and say it was an utter failure. And of course, with the length of time, with the maturity of the cycle, there's going to be some decline in the momentum, decline in some of the strength that we've seen, which is, I think, what we've been experiencing, this soft patch over the last several quarters here in Japan, which includes earnings as well. But going forward, because we think that the year-on-year bar will actually get lower going into the second half of this fiscal 2019 year, that we'll start to see profits gradually enter a recovery path. And if you look at market reactions, for example, to recent earnings results, even for deep cyclical and technology stocks that have had pretty horrific results, the markets are kind of looking through that. They're actually discounting. They've already discounted that bad news, and they're actually looking to the forward few quarters for a recovery in the latter half of 2019. So we're expecting full year fiscal 19 EPS growth of about 6%, which would be a rebound from fiscal 18.
Is this a good time for global investors to get into Japanese stocks?
We think so. Clearly, there are some sectors that are more attractive than others, but we still believe that there are a bunch of very attractively valued, reasonably, growth-oriented stocks in Japan that people should be looking at from a global perspective.
What about banks? Because that's one of the casualties, one of the fallouts from this yield curve control, very flat yield curve, tough tough to make money. And with yields falling overseas, big banks have a tougher time even finding overseas places to put their money.
So for value investors globally, Japanese banks look like the absolute most attractive sector in the world right now. Some of the mega banks are trading at price-to-book multiples of 0.4, 0.5 times, the cheapest ever. But then the other side is what we just talked about earlier about Bank of Japan maintaining ultra-low interest rates. What implications does that have for bank profitability? So they may look cheap, but are they cheap for a reason is, I think, the question that many people are asking. So that would not be our top choice, frankly, within the Japanese stock market to recommend to investors to invest in now. But if there is a move further out where normalization of monetary policy is on the horizon, that will be a very interesting sector, we think, ultimately to look for, but just not right now.
So at a time when more and more central banks are joining the global march toward lower rates, at a time when yields are falling and some are negative, more than $13 trillion worth of negative bond yields, what in particular, you mentioned technology, but in Japan, if I'm looking for something that's going to make me money, what are the sectors, what are the industries you like?
So, for example, it's clear that even though the global cycle has been slowing, it's interesting to look at domestic capital spend. A reflection of the fact that Japan, the labor force population is shrinking so dramatically that they need to improve productivity, period. And so as a result, a lot of companies are taking some of that excess cash that they've retained from earnings growth and deploying that cash into capital investment directed specifically at productivity and efficiency enhancing, for example, factory automation or robotics or AI. I think any kind of companies to this theme of efficiency-enhancing capex are definitely structural winners.
When you think of headwinds, when you think of the risk that you've got this reasonably positive forecast, you wake up at night and say, oh my gosh, is that, is it the trade war, U.S.-China trade war? What's the thing that if it changes one way or the other is the biggest upside or downside risk to what you see?
So I think on the downside risks, other than some global, very sharp risk-off event, for example, a hard Brexit or something like that, that currently I don't think is 100% priced into markets. It's generally for Japan a global economic slowdown, which could be triggered by China, which could be triggered by the United States, something along those lines, because ultimately, even though Japan does have healthier domestic demand over the last several years, it still does rely, of course, on global demand as well in global markets. So something sharp, downturn in that score would be very, very negative. We're also waiting the United States government's decision, of course, on auto tariffs. That will come out sometime this fall. Our current House view is that they won't go for very harsh, hikes in auto tariffs. But again, there's still a lot of uncertainty about that as well.